Well, guys, welcome back. So I've been looking at the stock market last 2 weeks to invest some money long term. And obviously you have to do your homework. And I thought some things that I came across might have been confusing for me at the beginning. I thought I'd share with you guys because I'm nice. Now I'm going to do your homework for you in this video. The best time to buy stocks is at a correction or when the market is flat. So the market has been sluggish last couple of weeks. Today, as I make this video, it's been recovering, but there is some fear in the air, and I want to explain to you what could cause a market correction going forward. And if it does, you can make sense of why it's happening. Let's jump right in. Alright guys, so I've been looking at stocks to invest in, and obviously it's not advisable to invest at the top. It's always good to wait for a little correction in the market before buying positions. Now guys, there's a lot of fear in the air in the stock market currently, and I want to do your homework for you in this video. So smashy, let's get right into it, guys. So you will hear this phrase called tapering being thrown around often, especially in the next couple of months, okay, next couple of weeks as well in the stock market. So what is tapering, guys? Tapering, in simple wording, is the slowing down of asset purchases by the Federal Reserve, i.e. the government, not just in the US but also in Europe. Now tapering usually happens when the economy runs hot, after, when the economy is in trouble, the government comes in and applies this thing called quantitative easing to help the economy recover. Now when the economy recovers, you have this thing called inflation. So now, in order to balance things out, you will have to start slowing down asset purchases. So obviously you don't have inflation all-time high. And on top of that, you will have to raise interest rate, hike interest. So that makes it difficult to borrow money. So in Europe, the ECB, European Central Bank, has in fact already determined that they will start tapering this year in the next couple of weeks and months. And that's why the stock market was spooked the last few days, and that's why we had a correction in the stock market. Okay, we had a drop in the stock market because that spooked investors, because they were thinking, okay, if money stops flowing into the bond market, which is what governments were buying, obviously less liquidity is going to be there. So that means the stock market will drop because there isn't a demand. Although that's not really the way things work, but that's how investors think. And this is not the first time tapering was introduced. In 2012 and 13, after the 2008 crash, the stock market crash, again, in order to help the economy recover, the feds, the government started buying assets and provide liquidity. Now, when the economy recovered, 2012, 2013, they had to taper. So there was this thing called taper tantrum in 2013. So when the Federal Reserve announced a future tapering of its policy of quantitative easing, the Fed announced that it would be reducing the pace of its purchase of treasury bonds to reduce the amount of money it was feeding into the economy. And that is what tapering is. Now, the Federal Reserve has recently announced that they will start tapering in November 2021 and going forward. So obviously, like I said, the market got spooked. And you can see it here in the couple of days where the market went and dropped. This is the Dow Jones Industrial Average. I use that as a measurement of the stock market strength. So basically, the Fed moves up its timeline for rate hike as inflation rises. So the way they measure inflation is by weekly CPI data. So CPI data is the spending of consumer. And jobs reports, employment reports, etc., etc. That indicates that the economy is running hot. When the economy is running hot, the Feds have to start tapering, but only when the economy recovers fully. So any positive news in regards to jobs, consumer spending, etc., etc. It shows that obviously there is money there to be spent into the economy, and as a result, you will have to start tapering. Otherwise, inflation will get through the roof. I mean, we're already at 10-year high inflation, which is crazy. So in order to bring that down a little bit, you will have to hike interest rates. Now, which stock is going to benefit from that? That is the question. Well, you will have bank stocks being the main beneficiary. Of course, interest means more money to them. Who will suffer? Any business that's operating on large debt. And that's most small companies and most tech companies, etc., etc. Because now that means the cost of borrowing is high for them. That could take a chunk from the profits and revenue. So the interest rate, the Federal Reserve considerably raised its expectation for inflation this year and brought forward the time frame on when it will next raise interest rates. However, the central bank gave no indication as to when it will begin coming back on its aggressive bond buying program. Now, guys, what could potentially crash the market or cause a large correction? When I say large correction, in 2013, when that was announced, right, and there was this thing called tantrum, the market dropped, or the Dow Jones dropped by 3%. Now, obviously, comparing that to whatever it was in 2013, 3% was huge. So whatever 3% is, or 2% of this, then that's really your target, because that's where you will say, okay, I'm going to start buying shares in stocks. So you will need some kind of a correction to make a decision. However, is this all-time high? Is this a bubble? No, I don't think so, guys. Look, when the economy is hot, of course you expect the stock market to be hot because the economy is good, etc., etc. If the economy wants to take a downturn, well, you will have a crash. But the Feds are there to help with that, but there seems to be a recovery in general. So, in regards to that, guys, what stocks will suffer? So I'm looking at any company with large debts, and the way you look at that is simple. Come here to Yahoo Finance and go to Tesla, for example. Now Tesla has dropped significantly today, and just go to statistics. Here you can see a lot of things. Somewhere in here will be debt, 11 billion in debt. Now, obviously, they have to pay interest on the 11 billion. If interest rate is hiked, that's going to be a lot of money out the window. Now, of course, 1% of 11 billion, you do your maths. If it's 2%, whatever it is, do your maths. That still will be a chunk. They will have to sell more cars in order to profit even more. Now, that's just an example, obviously. But the market and the stock will not react as bad. Obviously, another indication of a good economy is good earner reports. So if Tesla comes out with great earnings and it's increasing its sales and revenue, they will dwarf their debt obligations, and they will dwarf any other fear that exists in the market. But they will also contribute to the Fed's decision of introducing and hiking interest. This could happen in the next 6 months. This could happen in the next 2 months, or in a year's time. And that will cause the market to spook out. Okay? So here's what we're looking at. Here's the timelines. By the way, this week there will be important data coming out that could assist you guys in making decisions, because it will tell you if the economy is running hot. This specific data that comes out, such as CPI data, okay? Tapering. This will tell you when the Feds are tapering or will start tapering. If the economy runs hot, then it will push the Feds to start tapering. If the economy is running hot, then it will push the Feds to raise interest or hike interest rates. As a result, stocks will either benefit or suffer. Banks will benefit, other companies with high debt will suffer. Now, this could push the market into a bear territory for a few weeks until earner reports come out to show even greater growth in companies. And that's how investors will react. And this is why the market has been sluggish and moving sideways lately. But it seems like currently, especially today, the market is seeing some recoveries in the Dow Jones, etc., etc. That's me done. See you next time. Peace and love. Hopefully this little analysis gave you guys a little, something to work with going forward. When you see corrections, that's when most investors will take advantage of it. And just make sure you understand what you're getting yourself into. Not every stock is worth buying at the end of the day. See you next time. Peace and love. And don't forget that smashy smashy.